good evening. You're watching the India Development Debate. I'm Tamanna Inamdar and we have a power-packed show lined up for you today on a day when there's big news both from the markets, economy as well as political developments. But first, let's start with an ET Now exclusive. It may just be the biggest rescue plan that the government will put in motion for stressed assets in NBFCs. ET Now has learned that North Block is considering more relief measures for stressed NBFCs. The government is supposedly considering a tarp-like mechanism that was adopted by the United States Treasury in the aftermath of the 2008 financial crisis. Now remember, NBFCs have been almost at the center of the crisis in the financial sector and one of the key components of the slowdown we find ourselves in, especially after defaults by IL&FS. And hiving off toxic assets within these non-banking finance companies may just be the answer. My colleague Ruchi Bhatia, who broke that story, is joining me with all the details. Ruchi?
It is a story that you first heard on ET Now and is going to have a huge ramification for the financial sector, especially for NBFCs. Now, we at ET Now are given to understand that the Modi government, that is led by Nirmala Sitharaman as the finance minister, along with RBI, are looking at more relief measures coming in for NBFCs. We're given to understand, and I've been speaking to some top sources in the government, that the government may be looking at a possible mini tarp-like mechanism that was used in the US by the US Federal Reserve back in 2008 to rescue their financial sector. We're given to understand that Finance Ministry, along with Niti Aayog and RBI, are looking at ways to alleviate the stress of the NBFC sector. Now remember, TARP was the Troubled Asset Relief Program, and it was used by the US government to take the toxic assets off the books of the financial sector and give them the much needed relief. Here we are talking about Finance Ministry looking at unburdening the top 25 NBFCs. Remember, the top 50 NBFCs are already being looked at very closely by the RBI, and Niti Aayog, Finance Ministry and RBI are together holding talks. These talks are at an advanced stage, and they're mulling at various ways whether a rescue should be given to the NBFC space. Remember, this is coming in after a slew of steps that the government has taken over the last month and a half in a bid to provide the relief in terms of liquidity to the NBFC sector. As we told you, TARP was a program that was put forth by the US government as a response to the Lehman crisis, and in India we're looking at RBI-backed SPV that may be looking into buying the stressed assets of the shadow banks. But then again, there's a caveat here. We're given to understand that the central bank is so far not okay with the idea. They have expressed their concerns, their reservations about opening up their balance sheet in order to buy the toxic assets. But from the government's end, their idea is that RBI should be the buyer of last resort. Let's see whether RBI and the government can come on the same page with respect to providing relief for the NBFCs.
Absolutely, Ruchi. That is the big question. You know, earlier in a different context, of course, the bad bank idea was also floated. Could this be similar to a sort of bad bank for the NBFCs, and will the RBI be on board? But it also gives us an opportunity to look at the whole issue of problems within the NBFCs and possible solutions. And to speak more on this, I have with us today Raman Agarwal, Chairman of FIDC, and Abizar Divanji from EY India. Welcome to both of you, and thank you so much for speaking with us. Now, Mr. Agarwal, the story that ET Now has looked at, of course, and what our sources have told us, that this kind of solution may be in the works. It's still being contemplated. But do you think that something like this will work? Because all government focus right now has been to give impetus to NBFCs, which are still quote-unquote good. What about all the stressed assets that they're laden with?
So, if you ask me per se, I think the more effective way which was done earlier within India also during the same 2012-13 period was to create an SPV where, and that is one of the suggestions we had also given, was to create a fund where NBFCs could go and seek refinance, sell assets, and it could be at a very high rate of interest. so that if required, NBFCs could go and sell. Because if you personally ask me, I don't see the asset quality being of a very big concern as of now. It's more to do with getting the funds at the right cost. So I think that is a more workable and a more desirable solution, if you ask me, from the sector per se.
Okay, so now funds at the right cost is also something that the government has been working on. How is that working out so far, Mr. Agarwal? Like the finance minister has issued a slew of measures to sort of unlock that grid of credit. Has that started trickling down and showing its impact?
Yeah. No, see, let us understand. Whatever measures were announced by the government and even RBI are all routing funds through the banking sector, correct? Even the partial credit guarantee scheme was a way by which banks were to buy out pooled assets, NBFCs pooled assets. And now, of course, partial credit guarantee scheme has not much taken off, because we are made to understand that the credit guarantee structure is not yet in place, while thousands of crores have been sanctioned, but the actual disbursements are yet to happen. So the idea is that the point that banks have become risk averse when it came to lending to NBFCs. So the actual impact has not come to the desired level. It's been more of a painkiller kind of a giving solution, which has actually acted now. So I think the real need is to look at funding sources beyond the banking system. And that is, I think, a more desirable solution also from the banking perspective also.
No, absolutely, and I see the perspective, and we talked about that as well, that RBI is not going to be too excited with this idea. It's perhaps one of the options in the mix, which also gives us the opportunity to look at what's happening with the sector. Abizar Divanji, what do you make of a possibility of hiving off the stressed assets in some form or the other into an SPV?
No, so I do believe that I think the answer is not hiving off the stressed assets, because hive it off to where is a big question. If you're going to set up another SPV where you pool in all the assets and hive it off, then that SPV will still need to be funded, as Raman just said. That the idea that the real issue is not that these are toxic. The idea is that that most of the funding has stalled projects, and that's why it's not happening. Let me just step back 2 seconds. The NBFC model is a systemic issue, and the stress that's caused in the NBFC is that of a systemic one, and I'll explain how. NBFCs primarily lent to areas where banks could not lend. And leave aside the retail lending of an NBFC, let's talk about the wholesale lending. They lent to special situations and they lent to real estate primarily. Now, if you take these two large credit lendings that they did, the cash flows from those lendings effectively were irregular, while the bank payments, because NBFCs were funded by banks, the bank payments were regular. So when the cash did not come in because of the irregularity and hence and even the stress in the underlying sectors, they kind of managed for some time by getting bridge financing in from the NBFC sector, from the mutual fund sector. And when that stopped, frankly, the asset liability gap in an NBFC moved up significantly. And that's the reason why the stress in the NBFCs came to light. So now if you look at the underlying sectors which really need help, if you take real estate and special situations lending, they have taken positions around equity by funding loan against shares, or they have funded loan against properties, or they have funded live real estate projects or purchase of land. In these kind of illiquidity type situations now, you need to segregate projects which require immediate liquidity, and to that extent I pretty much liked what the finance minister came up with earlier, to say that there is an AIF fund and some 20,000 crores was going to be put into it. This was supposed to be non-bank sort of funding, because I said LIC will put in money and State Bank of India will put in money and a host of other global investors will come in. What we lack today are two things. One is the ability of all NBFC lenders, including those of banks, by the way, banks and NBFCs, for a particular obligor to come together and collectively work out a resolution plan, and then this AIF or whatever to fund the growth. I think that will solve the problem as against moving in an SPV.
Okay, so but You know, you raised the good question about what to do with the stressed assets. I just want your take, Abizar, on what the government has done so far. They've sort of advanced funds, you know, where there'll be pooled resources, especially for good NBFCs. Mr. Agarwal tells us that that has not really shown impact so far. What else is in the realm of something which is doable?
So I think the second part which is doable is the AIF fund that we spoke about, where we said that the government will contribute 10,000 crores. LIC and State Bank of India together will pool in money and will reach some 25,000 crores. And then once good assets are identified, this AIF will then go internationally and raise money, and the pie will get bigger. Now, for this to happen, this is akin to setting up an NIIF fund that we had for infrastructure. This will be for a fund set up to refinance NBFCs. What is required is a good management team which actually runs this AIF. But today we lack that, and nobody's spoken about that. So the scheme is good. I think the intent is non-bank as Raman wanted, and I agree with that, because I think the systemic issue is banks funding NBFCs. So let's get more non-accrual or non-regular interest paying money into an AIF, and let that AIF then go and specifically fund individual projects which are good enough for completion. So that will actually make sure that that asset gets the relief that it needs in terms of a restructuring. But what we need is a good team to assess what is that restructuring and how it's going to be funded. That's only when the AIF will attract capital. So the idea is, what are we doing to attract capital in that AIF? The idea is brilliant.
Yeah, Raman Agarwal, what proportion of these stressed assets and ballpark sort of idea I want to get from you are rescuable? And then, of course, the second question to what Abizar said, how easy is it to raise that kind of fund in this environment?
See, I don't see, if you ask me, if you say that what percentage is rescuable, I will answer it in this way, that the asset quality per se is not bad to a situation that things have really gone out of hand and you cannot revive or rescue. It is very much rescuable. A good significant chunk is rescuable, let me tell you. And if you, in terms of, fundraising, well, see, as Abizar put it, if you look at the wholesale lending part, yes, AIF could be the answer. And there is still a lot of interest by international bodies in coming and investing in the NBFC sector. That, let me share with you, in spite of whatever has happened. And that interest still continues, and that is where I draw my positivity from, that I don't see that should be an issue. But let me add one quick pointer here, that while we talk about the wholesale lending, even for the retail lending NBFCs, while it may not be such a very grave issue, but the large number of small and medium sized NBFCs are facing the crunch too, because there again they are dependent on the banks for funding. So there again some kind of a refinance mechanism. For example, we've even suggested that why not NHB now take the role of refinancing entire NBFC sector and not only HFCs, now that the regulatory function has been taken away. So that could be the answer for the small medium sized NBFCs focused on the retail lending part. So all these aspects, along with some kind of an AF for the wholesale lending, could be workable, very much workable.
Abizar, you agree with that? You talked about the AIF. Both of us seem to agree that that's the best bit. And the government talked about an initial fund of 10,000 crore rupees. Looking at the size of the problem, that's just going to be a very initial fund, a drop in the ocean. LIC, etc. may put in some money, but you're going to actually need foreign funds to come in with the money. Is the appetite there for that kind of fundraising?
So I think the appetite is, as Raman explained, the appetite is clearly there. What is not there is that we don't have a platform or a team which is credible enough to raise and manage that AIF. Because that is what we need. I mean, we've spoken about many things where we've spoken about distress. We came out with Shashakt. We came out with, now we're talking about AIF. And tomorrow you'll talk about something like a tarp-like program. Even for a tarp-like program, you need an asset manager to take decisions Our
so
problem
difficult
in the,
to
in
get,
the sector
Abhisar?
is if
What-
the banks, banks and NBFCs.
Why is that so difficult to get? Why is that so difficult to get that kind of expertise in the system? Why do you see that as a challenge?
No, there's no. I don't think there is focus on it.
Okay.
I'm sure there is. I'm sure there are enough good teams available.
Yeah.
You will need to attract private sector talent to come in there, and if the government is willing to do that in terms of private sector talent, I think it will happen. We've done it in NIIF. There is no reason we can't do it for the stressed NBFC and banking sector.
Well, excellent points then. I want to thank both of you all for coming in with that perspective on, a plan in place to rescue the NBFCs. Thank you so much for joining us on that debate.